Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Welcome to Ask Rob and Rob. It's Tuesday. That means 2 questions, 2 answers. Bosh, let's do it. Rob, how do people send their questions in?
Bosh, love it, Rob. Okay, go to propertyhub.net/ask. There you can find a place to record your message directly. You can find our contact number if you want to leave an answer phone message, or you can submit your question for the Sunday Times if you prefer to write things down. Whatever you prefer, we're good with. So now you know how to get involved. Let's get involved with some juicy questions. Rob, who have we got up first?
Well, our first question today is from Gary.
Hello, Rob and Rob. This is Gary here from Vauxhall. Thank you for all your advice over the years. I'm very lucky to have recently inherited a property in Notting Hill. It's a small second-floor, 2-bed flat on a prestigious road, so most of its value stems from the location. My plan is to sell it and use the proceeds to invest in cheaper property in areas with higher growth potential. However, as it stands, the value of the flat is down about 20% from the 2014 purchase price. My question is, should I hold out for more positive sentiment in the prime London market or accept whatever price I can get for it now, even if that is considerably less than what it was bought for, so that I can focus on using the capital on a more diversified and strategic portfolio? Thank you in advance.
Gary, thank you for your question. This is a really interesting one because I would not have expected the value of a flat in Notting Hill to be down 20% from 2014. It's true that London has been the worst performer in the country in terms of property prices for the last 5 years or so. Up until 2016, it was on a major growth spurt. So I would expect it to be up on 2014. 20% down is substantial. So I'd be interested in why that's the case. Is there something in particular about the flat that's holding its value back? Because your question is, should I hold out or should I accept the price I can get now? If you're going to hold out and hope for a higher price, you need to be confident that there is some kind of catalyst that is going to create that increase in value. That could be market related. And yes, it's certainly not the ideal time to be selling a prime London property right now, but it's also not terrible. So this 20% thing is making me think, is there something up with the property? Is there something that needs to be fixed there that could allow you to realize an increase in value? Because as I say, while the London market isn't great, nor is it terrible. So what I would say is don't anchor to that purchase price, because if you hold out for as long as it takes to get back to that price, then that will have prevented you from doing what you want to do, which is, as you've said, using the funds to go and more strategically build a portfolio elsewhere. But of course, if there's a possibility that you could achieve significantly more by waiting a little bit, then you should do that. It's just a question of how long do you need to wait for. So I would say first thing to do, figure out if there's anything that needs to be fixed with the property itself. Next of all, maybe give it a little bit of time. Sentiment in the market has been improving throughout the year. It may improve even further post-election. In the meantime, be doing your planning. Be thinking about what that new portfolio you're going to build is going to look like. But don't wait around forever. There will come a point where you have to accept, you know what, it's worth what it's worth. And if I can take the funds from that and use it to do what I want to do, then that is not a bad position to be in. So Gary, thank you for your question and good luck.
Good luck, Gary. Right, next up, we have a question in from Ryan.
Hello, Rob and Rob. It's Ryan from Property Hub Select. Quick question about mortgage arrangement fees. Do you normally get them added to your mortgage loan, or do you usually pay it off in full at the start of the mortgage for your buy-to-let properties? Thank you very much.
Ryan, thank you for your question. I'll tell you what I do, and I believe Mr. D does the same. And it might not necessarily be the best thing to do, but I'll explain why I do what I do, and then you can decide what you want to do. Okay, so I roll it in. Now, there'll be people listening to this tutting, going, oh, well, you're going to be paying interest on that. But the main reason for rolling it in and not paying it up front is I'd rather have the cash at my disposal. Yes, I'll pay a little bit of interest when it's rolled in, but if I'm half decent at investing, that cash that I've got in hand, I can use for other things. Now, by itself, it's not a tremendous amount of money. But if I make these decisions across everything I do, which is I'd rather have the money at my disposal when I have the opportunity to put to good use, I know over the long term I'll probably be better off. Plus, it's just nice having the cash. It gives you peace of mind that you've got that extra cash there if you want it. So for those reasons, that is why I roll it up. But if you do it the other way and you pay it up front to save a bit of interest, I don't think you're a terrible investor. I can see the complete logic for doing it that way. But that's what I do. That's what Rob does. And if you want a copy, feel free.
So that is us done this week. Thank you for those questions. And if you want to send in your own, of course, you can do that at propertyhub.net/ask. We'll see you back here on Thursday for the Property Podcast. Until then, bye-bye.
Bye-bye.